All right, let's begin. Good morning, Checkmate crew. It is 10 a.m. here in the East Coast, 30 minutes after the opening bell. Today is Tuesday, November 8th, 2022. I've had to move the stream 30 minutes later just because of a prior business arrangement that I have. I have these morning calls I have to do for my other business, and so that has forced me to shift this 30 minutes. And we'll keep to this schedule for now. I think it's going to be for just this week, but I'll let you guys know later this week if this schedule change is more permanent. Okay, but let's get right down to it. Today is Election Tuesday. Today is the midterm election here in the United States. A lot of our senators, congressmen, governors, local officials, they are on the ballot today. And so this has some repercussions when it comes to trading. I don't really base any decisions on trading based on political outcomes. I think that's a fool's game. But having said that, there are certain things that we can expect if we see certain results. For example, all right, right now there is, at least the sports books right now are pricing in, or not pricing in, but they're predicting that this will be a Republican victory for the Senate and the House of Representatives. So we're going to have a split government. All right. We have a Democrat as a president, who's President Joe Biden. And then right now, again, according to Bovada, one of the largest sports books, we are pricing in, or no, not pricing in, but they're predicting there's money on the line that the winning party for the Senate, House and Senate, are going to be Republican. So that has overwhelmingly the most favored bet. So what does that mean? So if we do have a split Congress, usually what happens is there's gridlock, all right? And the business community tends to actually like this. They like the fact that there's gridlock. That just means there's less extreme legislation that is likely to get passed. All right. So if one side has all of their agenda points on a bill, it's very likely that it's going to get rejected by another branch of the government. All right. And so because of this gridlock, we see actually spending go down, usually in years after a split government. So what does that mean for the bond market? All right, so that could mean that we could see the budget deficit fall. And if that's the case, that may create a temporary short-term shortage in the treasury market, okay? And so we might see some treasury notes and treasury bonds get bid up, and we may see yields come down just a bit, all right? So that would be TNX, all right? So we'll see what happens. Could this be the top, the seasonal top? I don't think this is the real top, okay? I think maybe in the years to come, we may see the TNX go up. But at least for this season and this year, we may see a top and the TNX if the Republicans gain both the House and the Senate. All right. Now, these sports books are not always 100% correct. They tend to be right, but not always. Back in 2016 was the best example. Everybody thought it was going to be a sweep for Hillary Clinton, but that's not what happened. Okay, so there is a chance that these sports books are wrong. It's very possible. And so again, that's why I've been very patient in any large trade, because this is a binary event. So depending on what this is, and also too, this may not be decided tonight. Okay, even though the election is today, if it's too close in certain races, we may see a recount or a runoff, especially in Georgia. In Georgia, if it's too close, they'll have to have a runoff vote. So depending on those results, we may not really know who controls the Senate. The House of Representatives will know, but I think we'll know pretty soon. But for the Senate, we may not know who controls the Senate for maybe a couple of weeks. So we'll see. Okay, so this is not immediate, but we may see yields fall down if we have a split government. And I actually think this may cause a fiscal cliff. And my thesis. I've been saying this: 2024, end of 2023, early 2024. That's when I really think we're going to see some volatility in the markets. I think we're going to have a solvency risk in emerging markets. Couple that with a fiscal cliff here in the United States, and I think that could be a confluence of risk events that happens around the same time that could cause some volatility in the market. So I actually think it's going to be end of 2023, early 2024 when that happens. So and at that point, who knows what will happen then. But I think this could definitely add to that if U.S. spending goes down. A lot of we may see lower growth in the years ahead because of this. All right. That's just my opinion. Of course, I don't have any data to support that, except historic data. Usually, history, when you have a split government like that, usually you see spending go down. And especially in a time like this when the economy is slowing down and government spending goes down, after about a year or two of that, again, we could start seeing some effects in the wider economy with that. All right. So that's TNX. That's something to look out for. If the TNX falls, of course, that's going to be tailwind for a lot of stocks. I'm not gonna speculate on that. Again, trying to speculate on a political outcome is a fool's game. So I'm just sitting out for now. You guys know my positions. I'll go over my positions later on, but you guys know. You guys know my philosophy on this. Patience pays, okay? So right now I'm just being patient until after this and until we see some clarity. If the TNX goes down, I do think that the TIP-TLT will go down. And actually, I want to show you guys TIP-TLT because TIP-TLT, remember, we were talking about a potential we were talking about a potential lower high, lower low getting created and the TNX coming down. We were saying that could be a possibility. We would want to see the TNX really drop in order for our TIP-TLT to come down. Well, guess what? TNX is not coming down too much. And so we're actually seeing it revisit and back test this breakout. If we want to see a failed breakdown, okay, or a failed breakout and this really break down, TNX is really going to have to drop, all right? I don't know if this is going to be that failed breakout. Already on the monthly chart, we could not get a failed breakout, okay? It is a valid breakout. Okay, it could still fail in the monthly chart on the next 1 or 2 month candle, according to technical analysis rules. There's that 3 candle kind of rule that some people follow in TA. So I guess technically it could still break down next month. But this, we were really looking for this to come back down. If we wanted to see a quick breakdown of this failed breakout, we really wanted to see this close in this box on October 31st, and that just didn't happen. It just did not happen. And so, could this mean that it's that inflation expectations in the future are going up? We'll see. I don't know what the market is trying to price in right now. Maybe they're pricing in higher commodity prices down the road in the next 6 to 9 months, which I think is actually a valid thesis. I actually do think commodity prices will start going up after spring of 2023. Is the market already looking forward to that? We'll see. Okay, but right now, this is definitely headwinds for tech stocks and growth stocks. And judging by our growth to value line, our growth to value ratio, it's still going down. So if you're going to go long anything, if you're going to play a bear market rally, it is best to go with the Dow. All right, it is best to go with a value stock. And if you're going to short tech. All right, because this is telling us that, okay, it's going down, and we've been saying this for a few weeks now. You know, we started monitoring from here, and I said, oh, from here, you know, if you're gonna go long, only go long value. If you're gonna go short tech, and this is why if we get to 41.25, I'm gonna buy QQQ puts as long as this ratio keeps going down. All right. And this ratio probably will not turn up unless TIP TLT goes down. TIP TLT, that ratio has to come down in order for us to start seeing relative strength in tech. All right. And we're just not going to see that. So if you guys want to go long tech, I highly recommend that you guys take a look at TIP TLT and also the growth to value chart as well. If this keeps coming down, shorting tech is profitable. Going long on value is more profitable on bear market rallies. All right. So that still hasn't changed. We're gonna, in order for TIP TLT to go down again, TNX is gonna have to drop really hard. Now, in certain midterm elections, we have seen that. We have seen right after the midterm elections, especially after a split government, that the TNX will drop. Now, I do think that drop will be very temporary, but I think that if that does happen, as history suggests, we may see the TNX really drop and perhaps form a high for the season, you know, for the year or something. But I do think at the end of 2023, sometime 2024, I do think it's going to keep going up again as there's solvency risks. We may see emerging markets, a lot of emerging market central banks have to sell their foreign reserves, and a lot of the foreign reserves are held in treasury bonds. And so we may see them having to sell treasury bonds to sell dollars in order to prop up their own currencies. We may see that. And I think that's going to happen around end of 2023, early 2024. So I don't think these are the highs, like, you know, for this whole like multi-year bear market trend that I'm foreseeing. But I do think seasonally, this may be the top seasonally. So that would be this year until, I don't know, maybe early next year. All right. But I do think it comes back at the end of 2023, early 2024. As long as also these short-term rates, 5-year, 2-year, keep going up too. You know, we're going to see support for the dollar. Okay, as long as these short-term rates go up, there is, you know, that TINA thesis, there is no alternative, doesn't exist. There is a dash for cash. You know, and again, if short-term rates are going up, there is a incentive to keep cash or to keep short-term paper and just get that yield and not risk it and be risk off. As far as equity markets are concerned. So as long as also the short-term rates are going up, and you guys, I don't know if you guys, some of you guys don't have trading view, some of you guys do have access to futures quotes. You can also use the 5-year futures, that's the ZF futures, and as long as it's going down, okay, and yields are going up, all right, because bond prices and yields are inverse to one another, you know, as long as that's the case, we're going to see this dash for cash. Speaking of cash, let's look at the Dixie. The dollar, I think, is pulling up a little bit today. And so we're seeing, we saw initially in the early markets that we saw a little bit of a risk off sentiment, but I think that's kind of reversing. Let's actually take a look at the Dixies. The Dixie, oh, it's actually coming down. So it actually was a little bit higher today. Oh, yeah, see, it was a little bit higher. It is coming down. We're seeing the risk on currencies, euro and the British pound acting positively to that news. I do think this though. There's a lot of dollars that are locked up in foreign dollar denominated accounts. So overseas, for example, you know, in Europe and in East Asia, you can actually open up dollar denominated accounts. And a lot of people did that. A lot of institutions and a lot of investors actually did open up because they actually have good yield. Their yields actually from one of my buddies who lives overseas, he was actually getting a yield that was higher than the 2-year treasury note on a dollar denominated account. All right. So if we see, I think, the British pound go up. So if this chart keeps going up, and at the same time you see the US dollar Japanese yen coming down, I think that's going to unlock a lot of money. It's going to unlock a lot of money that will need to find a place to be invested in. Okay, so I think the leading indicators going forward for the next maybe couple of weeks is the British pound and the Japanese yen. If we see the British pound really go up, and also the euro too, the euro. So if we see the euro go up, the British pound go up, the USDJPY chart coming down, okay, and USDJPY coming down would mean the yen is going up. I think that would signify that there's a lot of cash entering into the market. And we may see like temporary bounces if that happens. So those are I think the three charts for the next few weeks you really want to look at and pay attention to for risk on or risk off sentiment: British pound, euro, Japanese yen. Okay, those three. All right, I think those are going to be key. And I think we're already seeing this Japanese yen too. It's coming down. If we see this really accelerate to the downside, British pound keeps going up. That news out of the UK about increasing taxes and cutting spending is actually doing a little bit of good for their gilt market, which is their bond market. And so we're seeing some positive price action, at least for the British pound. And again, if this keeps going up, euro keeps going up, again, a lot of dollars, a lot of cash is going to enter into the market. And that may temporarily put a risk on. Speaking of Europe, our euro trade is coming up real soon. Look at that. The DAX is coming up to our short zone. So our zone is this zone right here, this 13,000, let's say 13,800, but just shy of that, 13,795. So 13,795 to 13,900, this is my zone to short Euro Stoxx. We're getting really close. Okay, so as you can see, I have multiple alerts, and I will be looking for an entry around that time. Hopefully by the time the DAX gets to these levels, probably as it gets closer to 13,800 or so, 13,900 or so, probably then that is when the Euro Stoxx 50 index will probably be around this 3,800, 3,816. This is my level right here. If this hits, I'm shorting the FEZ. That's the ETF for the Euro Stoxx index, FEZ. We kind of looked at a few trades on this. I do like the January and February debit put vertical spreads. At that time, most likely this is going to be around 36.5 or so, 37. So I'll try to build a spread then. But I'm basically looking for at least 3-to-1 reward to risk on the debit put spread. So actually, let's take a look at it right now. What is the 35.30 paying right now on the February 35.30 is paying 120. So okay, we're already there. So that 35.30 already has a 3-to-1 reward to risk ratio. You can actually make 380. 125 would be exact 3-to-1. So that's 375 that you could gain for the 125 at risk. That's your 3-to-1 right there. Okay. So right now it's a little bit greater than 3-to-1, 35 to 30. By that point, by the time the Euro Stoxx index is at 38.16, most likely this is going to be around close to $37. The FEZ is going to be close to 37. So, ideally, I want to be my long strike. I want to be close to at the money as possible. So if it's at 36.31, where are we at 36.31 for February? That's $1.50. So hopefully that can come down to 125 at 36.31 at 125, 3-to-1 reward to risk. That's a great trade, and we have until February. If you want a little bit more gamma exposure and you're okay with the risk, you can go down the chain and go to January or December. I don't know about going to January or December. Maybe January, I might entertain that idea, but December just seemed a little bit too close to comfort for me, although you do get a little bit more gamma exposure, and that I think is a very good supply line to really short the Euro stocks. I think there's going to be a lot of supply here. I think a lot of people bought here, and I remember JP Morgan and Goldman Sachs and Morgan Stanley, they were all saying, oh, start getting long on European banks. They started saying that around here. So I'm sure there's a lot of bag holders here. There's going to be some supply there. I do think it's going to be, I don't think it's going to chop around here for a bit and then sell off. I think it will be a pretty quick move. But if you want more gamma exposure, you can always go a little bit closer dated. But for me, I'm most likely going to stick to the January or February chain, and I'll let you guys know for sure once we get there. It really depends on the skew and how much bang for the buck I can get once we get up to that point. All this options data can shift really quickly if the market goes up to that point. So we'll see, okay? One day at a time. But my alerts are there. I'm ready for this trade. I just wanted to go over this because we are getting very close to the trade actually triggering, okay? So that's my trade. Again, nothing has changed on the U.S. indices side. On the U.S. indices side, I'm still being patient. Again, patience has really paid. A lot of people got chopped out. It's really funny. If you look at retail behavior, retail went record high puts right here in the mid and beginning of October when we were at the lows. Record high put activity in by retail, and then when we got at the top here was almost record participation in calls, especially tech calls. Tech stock call options happened right here. So, retail just got burned on both directions. So it's, again, patience pays. It's sometimes I've been now trading for, wow, almost 20 years. I started as a kid. So, in my experience, and I've made tons of mistakes. In my experience, in order to really have longevity in this career, it's not really about the returns that you make, it's the losses that you avoid, okay? And so by being patient, yes, we miss out on certain trades, yes we do, but we also avoid these large drawdowns. And my philosophy is this, anybody can have a losing streak. So if you had 10 losing trades in a row, would you be able to bounce back quickly and make fresh new profits after one or two trades after you make up your losses? That's my philosophy. So because everybody's going to have a losing streak. That's just part of trading. That's just part of the game. You're going to end up having losing streaks from time to time in your career. Can you bounce back from that? Does it take you one or two trades to get the break even, or does it take you like a year or two to get break even? And again, put time on your side. As long as you don't have big drawdowns and you keep growing your account, you will always compound, and then time becomes your best friend. Whereas if you have these huge drawdowns, time becomes your enemy, all right? Think about that for a second, just food for thought. Anyway, my plans for the U.S. indices still hasn't changed. I'm really looking for that 41.25. And usually after the midterm elections, we do see a VIX deflation. We see the VIX actually coming down. The VIX term structure comes down. We also see increased contango in the VIX futures market after a midterm election. So if that happens, I can see the market drifting higher. And again, 41.25, that's where, and as long as our IVW, IVE chart, remember that growth to value chart, as long as it's still keeping pointing down, this is where I will short the market with some size, okay? Some of you guys asked me via DM. Yesterday, I day traded a little bit. I went short when SPY went to like 380 or so, and you guys saw me make about 40% on that day trade. And you guys were like, oh, well, are you changing your plan? Are you shorting earlier? No. That's just a day trade. That's just that end of day, last hour, gamma trade, where the gamma becomes bigger than delta, and you're really able to capitalize on small movements. That's a totally different trade than a swing trade slash hedge when I pre-plan these levels. totally different trade. Okay, totally different mindset. That's a day trade. This is more of a swing slash hedge. As you guys know, I have a large position in SPY. That's my forever account. I have SPY, I have CVX, I have Apple, I have Boeing. So I also use my spec account as my hedging account as well too. And so this is more of a position that I will go with size, not only to protect my long-term account, but to also speculate on the down movement in the market. So this is going to be a position that I put some size toward, maybe 10 to 20% of my speculative account. Whereas a day trade, that's like usually for me a day trade with 0 DTE options, 0 days till expiration. I'm usually never going over 0.2, 0.3% of my speculative account. I never go beyond that. It's just, I use principles within the Kelly criterion, bet sizing based on volatility and payouts. And so rules dictate that more volatile payouts with a bigger chance of a quick loss, you have to position it way smaller. Okay, mathematically speaking, it's just basic math. Okay, and so for those day trades and end of day gamma trades, no, I don't go over 0.2, 0.3% of my speculative account per that. Most of the time even lower, sometimes like 0.1, 0.05%. But these trades, these swing trades, these high conviction trades, and that act as hedges on my long term portfolio, no, those I go with size. 10 to 20%. Although in the summer when I did build those hedges out, I only went like 6% of my spec account. I should have done more. I should have had higher conviction in that, but this June 9th really spooked me out, so I couldn't really do anything with size psychologically. This one I only put 6% into, but this one I will have higher conviction for. I will put about 10 to 20% of my spec account into these puts, again, 3 to 6 months out, probably on the QQQ based on the IVW-IVE ratio going down, okay? So that's that. Let's just go through our plans, our holdings right now in the spec account. PPC is doing actually pretty good. Again, our long-term thesis. I was on a Twitter space earlier and I explained this thesis and people actually liked it. I was surprised, who thought a chicken slaughterhouse would be sexy on Twitter, right? I guess people are coming around the value. So I do think, the PPC is a great takeover target. JBS already owns a huge amount of shares. They've been trying to take over the rest of the outstanding shares. They failed to take it over here, and that's where we saw the drop. However, I do think that as meat prices go up, especially beef prices, and let me just show you the live. This is live cattle futures, and you see here they really haven't had much of a dip. It's still marching higher. Okay, so as long as beef prices keep going up, alternative proteins like chicken and pork become more and more desired, and we're already seeing that. If you look at the McDonald's earnings, they're already highlighting the adult Happy Meal with the chicken sandwiches, with the chicken nuggets. It has a sense of nostalgia to it. They're able to charge higher margins. It's a very high margin product. Even in Europe too, they got the chicken Big Mac. Apparently in Italy, it's doing extremely well. And so we saw McDonald's have a beat to their earnings because of that. And I think the chicken story, I think, is becoming more and more of a thing as beef prices go up. And over the summer, again, we've had a record number of calves auctioned off to the slaughterhouses because a lot of ranchers couldn't afford the increased costs in water and feed, and so they decided to slaughter their calves early. Well, what does that mean? Well, that means in the future, where are the cows to produce those calves, right? There's going to be less of them. So I do think that price of beef will keep going up at least the next 2 to 5 years, and chicken prices will probably go up too. PPC is a pure chicken slaughterhouse play. It really plays into that, and it's one of the few actually slaughterhouses, independent slaughterhouses outside of the big four that you can still buy. There's been so much consolidation in this industry. It really is a unique stock. So I'm still holding on to it. I did buy at $28.50. I was a little bit early, and I did not buy here because I got market psychology. Ugh. But oh well, I should have bought some more. Anyway, if we do pull back, if I do see it pull back down to the 23 zone, I will buy some more. I will buy the dip on the next dip on PPC. I'll add to my shares. I only have an initial position. If we get to over 28, 29, I will sell some covered calls on this, okay? That's PPC. I just wanted to go over the thesis again for PPC. What else are we in? Oh, UUUU. UUU reported earnings on, oh, look at that. It was down and now it's back up again. Look at that. Anyway, UUUU reported earnings. They did have a bigger than expected loss. It is, I mean, we knew that they were going to have a loss in the next coming quarters as they reopen their mines and get ready to produce again. The earnings call is after the market closed today, so I will tune in on that. Let's see what happens. I still have my my collar trade, which is you know, we'll see what happens to that. Maybe we should have rolled this sooner, but it is what it is. My cost basis on this is around a little bit over 607. So if we do get it called away at 7, yeah, it's a good 16% return. It is what it is. If I get called away there, I'll buy on the next dip. If not, we'll try to see if we can roll it or close out those covered calls. But we'll see what happens, okay? We'll see what happens today. And we'll see what happens after the midterms. And we also have that CPI report on Thursday. So if it's higher than expected, yeah, I can see some risk off happening and maybe we sell off. Although in the summer, when stocks were selling off, UUUU was still going up, which was kind of surprising. I thought when stocks were going down, UUUU would go down too. But it seems like our fundamental research has been pretty good. You know, this is, you know, even though all the other uranium stocks went down, UUUU kept going up. Go figure, right? The ones that we have covered calls on. HUT. Oh, speaking of HUT, crypto. I mean, just taking a dump today. There seems to be a billionaire battle on Twitter versus from you know, the head of FTX and the head of Binance going at each other on Twitter. I believe the head of Binance, they are divesting in the FTT coin, which is the coin in FTX used as collateral. Apparently, they are divesting that. You know, as they said, it's part of their plan to divest out of FTX. It is causing FTT coin to come down, and after we saw it really tank, that's when I noticed Ethereum and Bitcoin all really took a nosedive in overnight markets. We're seeing Ethereum down about 15. How far down is Ethereum? Last time I checked, it was down about 15%. No, it's about 8%. 8%. So we're down about 8%. Luckily, we did take some profit at 1650 on our ETH trade. Perhaps I should have stuck to the plan and sold all of it, but I do still have 2/3 of it. I will buy some more. With that 1/3 I did sell in 1650, I will buy again and on this green trend line. Once it hits there, I will buy. So I already have my order set for today at around this 1300 zone, a little bit over 1300. I think I set it at 1302 for the day. So I do have an order here to buy with that 1/3 that I sold at 1650 right at 1300. So my plan still hasn't changed. As far as the actual Ethereum market is concerned, we are seeing the OI come down. It was at 7.4 billion, but now I'm noticing that we're seeing, oops, where did it go? It was around like 6.8 billion. Let me just, I thought I had it up. Bear with me for 1 second here. So open interest is coming down. Again, last week we were looking at 7.4, 7.5 billion in Ethereum notional value OI. Now it's dropping to 6.7. I think a lot of those calls got wiped out. A lot of people got wiped out in gambling on those calls. Remember, we saw some call buying happening. We also saw some short-term call selling. So it could be that some of those people have closed out on those trades. I did ask one of our members to send me the gamma profile. For some reason, again, GVol is not working today. I don't know if they're just blocking out Americans, or maybe today is just a lot of traffic on their website. But one of our members from overseas sent us this. Thank you, BZ. So 1400, this is where we're seeing the high gamma strike right here. It was in 1600. We're now seeing this high gamma here. We didn't see this before. Remember how we didn't see this huge, and this is for November 11th. So that's for end of this week. We may see, at least for this week, price get pinned to 1400. Okay, and we're not that far from 1400. We're at 1435. So once we get to 1400, I'm gonna take a look at what happens to price action, and if it kind of stays there and just chops around plus or minus 3% around that 1400 zone, I think then it's a very good chance that after this is done, we might see ETH drift back up to its other high gamma point, which is around that 1600 zone. So for this week, we pin at 1400. After expiration this week, perhaps we drift to 1600. At least that's what the market looks like. Okay, so this week pin 1400, and then next week after this expiration, after all these options expire, perhaps we drift back up again. Okay, as long as there's no black swan event, no risk event, as long as there's no increased order flow that knocks this out. All right, so if everything just remains as is, order flow remains around the same as what it has been for the last few days, that's what I expect. All right, for now. All right, that could always change. Anything you guys want to look at? Going once, going twice. I see somebody typing. Let's give it a second. I see somebody typing here. You got any questions? Okay, all right, then in that case, that wraps up our session of the morning market memo. Our Discord invitation link is in the description below. Come join our Discord, be a part of our growing community. There's no sub fees, no paywalls. It's of the people, by the people, for the people. And if you enjoyed our video, hit like, follow, subscribe, comment, show us some love, baby. All right, again, this week, 30 minutes after market open, that's when we start the market memo, 10 a.m. Eastern time for this week. And again, if that's more of a permanent thing, I'll let you guys know in the Discord. So again, another benefit of joining the Discord, it's free. And also that's where I send out my live alerts and also schedule changes as well. I'll see you guys tomorrow at 10 a.m. and trade safe, guys. See you then.